Hello, everyone. Nick Powell's publisher of 1851. Today, we're going to talk with Ross and Brian, who are investors in Lightbridge Academy. To frame this discussion, if you're watching this, we're going to dive into due diligence. How did they approach the purchase of the brand? What are they thinking from a vision standpoint as a go forward? Ross and Brian, thanks for spending some time with me. So, let's start with stories. What you want us to know about you, what's your backdrop, and what makes you credible in the field of investing. Let's go Ross first and Brian second, just to frame the discussion.
Sure. And I think there's a fair amount of overlap between Brian and I, so we'll let him finish up kind of what I missed. But in terms of background, both of us come from a consumer and consumer services private equity investing background at two different firms. And it kind of spans from smaller sub-institutional sized businesses all the way to kind of multi-billion-dollar large take privates on my end at my prior firm. I started a independent investment business 3 years ago, where the kind of core goal was to partner with long-term permanent family office investors to focus on industries that we thought had a fair amount of secular tailwinds, were extraordinarily fragmented, that we could acquire kind of stable, mission critical, cash flowing founder owned businesses and grow them hopefully over 10, 15, 20 year spans. And kind of in that journey over the last few years, really zeroed in on the early childhood space for a variety of reasons, which we can get into. And in particular on kind of the premium and franchised end of that spectrum. And had built a relationship with Brian over the last 7 years since we met in business school, which ultimately led us to partner up and looking at opportunities. And so I'll let him give a little bit of his background as well.
Brian?
Sure. Yeah. After business school, where Ross and I met, joined a consumer-focused private equity firm, and I've been in private equity and financial services for most of my career. And we were more on the lower middle market side of the multi-unit consumer service business. We were both franchisees of established franchise concepts and had invested in growth franchisors. And so I've been on both sides of the equation. And in a lot of our franchisee investments, we were really one of the first institutional capital multi-unit operators in those systems, and brought a lot of the institutional playbook and toolkit into the franchisors, which they loved. And different franchises have different sort of philosophies about what they want to do. Lightbridge is one that Ross and I have been pushing for, that wants to work with larger multi-unit institutional investors, because we've had a lot of experience in our past being one of those large franchisees and bringing the balance sheet and the capital and the institutional skill set essentially into those investments.
Let's start with lots to unpack, but let's start with being a franchisee. And what I hear is you built a multi-unit portfolio as a franchisee. So your mindset when you went into becoming a franchise owner wasn't just, I need one or two or three of these. It was, how do I scale this business? So I'd imagine some of the decisions that you're making early on as a franchise owner is not micro. It's not specific to that moment. You're looking outbound and saying, how do we build something that is scalable and sellable? How did you facilitate that mindset? And was that part of your mission when you became a franchise owner for the first time?
Yeah. So I mean, there's multiple ways to skin a cat. So Chick-fil-A, for instance, does a great job of really working with owner operators that are focused on one unit, and that works for them. And then there are a lot of franchise concepts that work with multi-units very well. And one of the attractions to working with more sophisticated institutional investors is that they have the capital backing to grow quickly and efficiently. And they're bringing a lot of reporting expertise, managerial expertise, and that takes a lot of pressure in some sense off of the franchisor to grow the system really fast and well. It's much more of a symbiotic relationship where we're helping our franchisees all the time with managing their business, focusing on the right KPIs, but likewise, we're getting great input back from our multi-units because we know that they're smart, sophisticated, driven investors and operators that just want to scale. And what's nice about being a multi-unit is as you grow and diversify your business across multiple units, there are benefits to that. Your financing comes down, the underlying real estate, if you own your businesses, goes up. You can start to remove yourself from things like personal guarantees if you're taking on any debt. All those things are obviously very attractive to a franchisee.
So a lot of that language for a smaller franchisee, they're not going to understand it. They're not thinking big picture. When you entered this category, you're thinking big picture, which ultimately, I'd imagine when the two of you start looking at how do we become a franchisor or an investor in a franchisor, you're also looking for similarities in that business model when you're doing your due diligence. Is that accurate?
Yeah, I think so. I mean, first and foremost, the brand team and just the ultimate unit economics of that business are going to be the most important thing. And whether you're starting as a franchisee or whether you're investing in the underlying brand, you need to feel very confident in those. And there's a lot of work that you can do kind of outside in from publicly disclosed documents. But when Brian and I started building a relationship with the owners of the Lightbridge business now about 1.5 years ago, that was the core focus right out of the gates. We knew we wanted to be on the premium end of the spectrum. It's just very much more healthy unit economics, a lot more tailwinds, and a lot more, I think, insulation from anything that's kind of come what may from the government that's been on the news a lot, and that I'm sure a lot of potential investors and potential franchisees are keyed in on, and much more resistant and resilient through economic cycles. And so we knew we wanted to be on that end of the spectrum, and we knew we wanted to invest in a system that had a lot of kind of brand equity and operating history, but still a tremendous amount of potential to grow. There's not a lot of large scaled franchisors in our industry. There's a couple that have kind of gotten to that point and are starting to be tapped out on future growth, especially in a lot of core markets. And then there's obviously, smaller emerging businesses that are still kind of building out infrastructure and building scale and building systems and still trying to prove a value add to their franchisees. What we found in Lightbridge was a business that had kind of a great backbone, a great senior leadership team that had been put together over this span of decades, a great brand and great infrastructure, and is on the cusp of really becoming a national brand and expanding outside of its initial footprint in the Northeast. And so that was pretty rare, pretty special. And the more we dug in and started to validate the unit economics of the system, and what you love to see is really consistent performance across schools. It's great if there's some people who are doing very well, but what you really like to see is consistency. And when you look at that histogram of all your centers, not a huge variation between top to bottom. And we're just incredibly impressed with both kind of that infrastructure, that team, and then ultimately the underlying unit economics of the business, which are just as important to the franchisor as they are to the franchisee.
In today's marketplace, and even at the point of purchase, it's a very active buying community. Therefore, Lightbridge could have definitely said yes to probably multiple offers to raise equity, and they could have. But one thing you said in the opening statement, Ross, was you're looking for a business that you don't exit in 3 to 5 years. I would imagine some of the cultural matches ends up pushing this over the edge. There's plenty of money out there, but they had to find a cultural match to make sure they were aligned. How important was culture match for you guys, and what did you perceive for Lightbridge as a part of that process?
It's very important, especially when you're dealing with business that is founder owned and founder run for 25 years, and you need to have a very kind of strong sense of trust and loyalty to what got the business to where it is today, which I think we were able to establish during that process last year. And also recognizing that if you are fortunate enough to kind of get to participate in a great business with a great team within a great industry, and all those things are kind of working together in a virtuous cycle, it doesn't really make sense to set an arbitrary timeline of when you would have to kind of exit that investment for the sake of other kind of non-business related reasons. And so having a flexible investor base, which for us mainly consists of individual, family, and high net worth investors who don't have a duration on their investment, allows us to hopefully be caretakers of this business for many years to come, and hopefully provide continuity and kind of support to those multi-unit franchisees who want to help us take the system in 2, 3, 4x the size of it over the years to come.
When you guys were performing due diligence on the business, I'm sure there's things or question marks that come up, which for high net worth individuals or sophisticated investors, they are hunting for the reasons to say no and then searching for how do they get to yes. What were some of the things you guys had to overcome from an investment standpoint to say, okay, that we might not be comfortable with, but here's how we get past that? What were some of those obstacles that you overcame in the due diligence process?
Yeah, it's a good question. And off the top of my head, I can't really think of much. As Ross alluded to, and I think just to add to your last question, why it was a great fit. Ross and I had spent a lot of time in and around early education prior to this deal. And so when we were introduced to Guy and the management team, Guy being the founder, it was clear, I think, off the bat from their side that we knew what we were talking about. We weren't just speaking finance lingo. Like, we understood the industry, and we had pretty strong opinions on what separated a good operator from a bad operator, and what we found attractive in the early childhood education space. So if you think about all of the forms that early education is delivered, from home care to then center-based care, and then within center-based care from a lower price point and subsidy based care to where we are, which is more of a premium offering. We had sort of an idea of what we were looking for. And when we were introduced to Lightbridge, it sort of checked all of the boxes, and the management team was phenomenal. The unit economics were great. And we immediately fell in love with the opportunity, and I think that was also true of the team with us, and so we were quickly able to come to a deal. In terms of challenges, I think the one thing that gave us the most concern was the time frame between sign to open, which is the time between when a franchisee signs and when they open their school. And there's a lot of reasons for that. When getting these things developed is challenging for particularly a single owner operator franchisee. It's their first time developing commercial real estate, first time negotiating a commercial lease. And so there's a learning curve there, and that learning curve resulted in this lag between when a franchisee came into the system and when they got the doors open. And part of our strategy, and one way that we solved for it, and what we're really excited about with the future, is taking a more active role in that process by developing units on our own balance sheet and facilitating more of a turnkey solution for franchisees. And that will be just one of many options we provide to our franchisees and the Lightbridge ecosystem. But it's one we're excited about, and hopefully will help a lot of the customers.
Ross, you said something that I think is deeply valuable from an insight standpoint to those that are looking at investments, whether it's Lightbridge or anything else. You said when we were doing our homework, it wasn't just an outlier school that was outperforming the rest that we were able to point to in an item 19 and say, wow, the financial performance is there. You saw consistency across the system. And historically, franchise brands have leveraged an item 19 to say, look at this flashy number. And unfortunately, then what happens is expectations are not aligned with what the true actions are, and franchises get frustrated because there's only a few high performers. And what you saw there is you saw consistency. I mean, that seems like a valuable insight on how, whether you guys are qualifying future franchisors for your portfolio or a franchisee is qualifying a future franchisor. That seems like a valuable insight that buyers should be looking at.
Yeah, consistency as well as improvement on a mature basis, as well as improvement on a opening to fully ramped basis. All of those things were very positive and improving. And one of the things I think that's going to be a tailwind for us as we grow is that the core business started in New Jersey. A lot of schools and brand recognition and regional density within New Jersey, New York, and kind of Eastern Pennsylvania, tri-state area. And the business is in kind of the middle innings, early to middle innings of really pushing the brand down into Virginia, the Carolinas, Florida, Tennessee, Texas, throughout the Southeast, and starting to move west broadly. And one of the more encouraging facts is our core business, our legacy geographies have always been strong performers. But as we've moved into kind of these high growth, attractive demographic states where a lot of people have moved over the last 2 years, those numbers are improving. And you don't often see, the franchise schools start to kind of outperform the corporate schools, especially as you move out of the core geography. But it just shows what a tailwind a lot of the demographics in some of these new markets are, that as we've grown the footprint, the average kind of fully ramped mature performance has improved. And then the speed at which the franchisees are getting to fully ramped has improved as well. And that's a product, not just of the markets, it's a product of putting in place better systems and processes and pre-market opening and a lot of structure that is internally on our side and on the part of the franchisees that has led to that performance. And so it's a variety of factors, but it is encouraging for us, and it's made the conversations really fruitful as we go to new states where we might have a couple schools open, we might have no schools open, but some schools under development, or we may be selling franchises for the first time. It's made those conversations very, very easy to have.
Brian, you said something as you were going through the due diligence. You said we have a very specific viewpoint on who the persona of the buyer is. Now, obviously, you guys aren't sitting in the room qualifying the candidates at the end of the purchasing decision. That's happening at the corporate level. But talk about the persona of who you think is the right buyer for a Lightbridge Academy.
Well, first of all, it's going to be someone who has probably deeper pockets and a bit more sophisticated just by the nature of the business itself. So to build a school is more expensive than to open up a fitness studio or even a quick service restaurant or some sort of home service franchising business. And so from the profile of a prospective franchisee, it's going to be someone who understands that yes, the investment is higher, but the return is stronger, and you're willing to sort of put up more capital up front to really operate a business that is throwing off hopefully a lot of cash relative to buying a job, if you will, which I would argue a lot of smaller franchise opportunities are. And we obviously have a very sort of strict mandate is, okay, well, these are sort of the minimums we're willing to accept. But as we grow the system, we are looking to partner with more institutional capital that can grow with us, because part of our investment and what we're hoping to achieve over the next 5, 10 plus years is really accelerate growth. And to do that as a franchisor, we need partners who are willing to grow and scale just as fast as we are. And so it's always helpful to have franchisees that get that and have a willingness, desire, and the capital backing to do that.
Well, a few comments. So clearly, I mean, there's a difference between, and we talked about this before we went online, that there's a difference between a franchisee who needs this investment to work to scale their income, they're wealth builders, versus people that have already created wealth and now are looking for diversification of portfolio. The reality, what we talked about in the beginning, one of the challenges on why maybe more of an emerging brand, lower than Lightbridge, struggles is the time from signing to opening is so tremendous, and those franchisees get stressed and burned out throughout that process. So sold not open continues to climb, and the strength of the business continues to decline. You guys are picking up Lightbridge at a time where they're figuring things out. They're growing in a concentric circle or several concentric circles. And so therefore now you guys putting capital in, you're shortening that cycle so that now operators get in and they can continue to scale. And they're not overly stressed by whatever headwinds can come at them, because they're looking again at the bigger picture, which is what you guys did when you got into franchising. And I think that's valuable to anybody that's watching this on the outside. So what I would love to close with, and maybe go Ross, Brian on this one too. Why are you excited about this business as it go forward, and why should an investor also be considering Lightbridge as part of their journey?
Yeah, I mean, I'd say, so one, starting at the 30,000 foot level, it's a great industry. It's a large industry, $30 billion in terms of for-profit childcare. It's still very, very much a cottage industry to a large extent in terms of older, dated providers who haven't adapted. Even our largest competitors have 1% share. And so there's just a tremendous amount of white space if you're entering this industry now. And it's kind of one of these things where the tide is lifting all boats. And so we have competitors, but there's pretty much every market. They're doing well, we're doing well. It's really the industry's growing, and it's a great time to be in it. COVID was a disruption. I mean, you talk about things to diligence, like we were in the midst of it, but it's really remarkable that we've now, exceeded by a decent margin our high watermark of average enrollment per school from 2019, early 2020. So it's a great industry. It's proven itself to be very resilient, very fragmented, and a tremendous amount of opportunity to grow. And then kind of marry that with the fact that there's a dozen or so cities, and then many more within the Southeast that are kind of high priority in other growth markets, where we at Lightbridge have a blank canvas, and other brands may be tapped out, or certainly if they're not tapped out, not able to offer a 5-unit multi-site agreement within those markets to a new person coming in the system, where that's our focus. And we've had a lot of success thus far going into those very attractive demographic markets where there may not be multi-unit agreements left in other systems, but where there's still a tremendous amount of demand, and those schools are opening quickly and they're ramping, and they've been pretty productive. And so I think kind of from the industry perspective, and then from kind of our footprint, the places we're trying to grow in the white space in those markets that remains for a multi-unit operator, are differentiators for Lightbridge. And Brian and I are long-term owners of this business, and we're making investments in the corporate infrastructure as such, and trying to provide the most value to our franchisees, whether that's investing in technology, or whether that's using our balance sheet to co-develop properties and get people open quicker. So that's what I'd say.
Brian, thanks, Dad.
Yeah, not much to add. It's just sort of echoing Ross and saying what made us really excited about the business a year and a half ago when we were introduced to the team is still really exciting today. That there's so much that Guy and the founding management team that's still in place got right and continue to get right. And the culture is phenomenal. The unit economics are as good or better than anyone else in the industry. That I mean, franchisor or corporate run schools. The systems are just as strong, if not stronger, than everyone else. The NPS scores are stronger. And so really it was just about putting in place the right capital foundation, which we believe we have, and adding to the corporate infrastructure and filling out seats to help really step on the gas and grow the system. So still really excited about that.
I mean, that's a testament to obviously the homework you guys did, and then the proof that you saw when you actually got in there. There are plenty of investments that you get in there, and it feels a little bit turbulent, and it's like maybe we should have uncovered or lifted up a few more rocks. But here it seems like it aligned, and you caught it at the right time, and you're looking forward to it. And for any prospective investor that's looking at a system or a business, they want to look at lookalikes and say, who else is getting in there? Who else is putting their money behind this? Because it will make them feel confident and comfortable in the investment. And clearly you guys have showed that. So appreciate you guys sharing some time with us and telling us your story. Look forward to seeing where Lightbridge goes. For Brian and Ross, I'm Nick Powles. Take care. Thanks.
Great. Thanks, Nick.
Awesome. Thanks, Nick.